Hello everyone, I'm Dr. Stock. This video is for entertainment purposes only. Today I would like to talk about some of the things that I've seen across the indices, some of the stocks that have done well, some of the stocks that are not doing so well, and talk about what I see going forward with the stock market. Can't wait to share it with you. Let's get ready to rock. Welcome back. For those of you who are interested, if you would like to come over and join my Patreon, see the growth stocks that I have, the dividend stocks that I have in those two portfolios, and also the weekly watch list that I put together along with the help of my patrons, you can come on over and check it out. The link is down in the description. Also, if you're interested, down in the description is a link for Webull. By signing up and depositing $100, you get 2 free stocks. It gives me 2 free stocks for the referral, so thank you in advance for that support. I really appreciate it. And to those of you who have already supported, whether it's through Patreon or through Webull, thank you so much. I can't express enough gratitude. Moving right along, subscribe, hit the notification bell, hit the like button, share it with your friends. Let's get on to the stocks. All right, so the first thing that I'd like to share with you is just a quick look that we have here at the NASDAQ. And when you look at over the 1 day, well, we already knew it wasn't a good day. Down over 2.5%, 2.7% it says here. And if we look at the 5 day, again, it doesn't look very great. We look at the 1 month, it still looks really terrible. This has been going on for a little bit of time now. You can see that really taking place, peaking, it looks like, all the way back here at February the 12th. So we are currently at 14, that'd be the 26th, and then, so we're now in about the 3rd week or so of this. If we go out to the 6 month, it still looks bad. It is a sell-off. It hasn't been very good for the growth portfolio, and for anybody who is into tech stocks or the growth stocks and things that were considered overvalued at the time, that's where we're really seeing a lot of these sell-offs happen. And for things that are down across the market, if it's an otherwise good company, those solid companies are the ones that are really going to be the ones that really recover out of this and really provide that value. Other companies that would be more speculative and would be more questionable whether or not they return that value, those are the ones that would also be questionable for whether or not they're going to fully return to where they were at prior to the sell-off that we had. Again, that looks like it was right around this level that we have, like I said, February the 12th. So if we take a look right across this line where we're at now, and I know this isn't the best for drawing the line, right around that 13,000 mark, is you can think of that sort of like if you look at this low, and then we have this low right here on January 29th, this low right here on March the 3rd. You can think of that sort of as an area of support, so it's possible that we could see the markets turn around. Of course, macroeconomic and geopolitical news could always do things to negatively impact this or positively impact this, so really have to take a holistic look when it comes at the markets in this way. Stimulus news, if we get good things coming out about the votes on that or about the progress made on that, or not a lot of changes that are really going to negatively impact the amount of money that's going to be coming out with the stimulus, those are all things that are going to come into this and really affect what we have. So hoping that we don't break that area of support. The next low that we have down from there is all the way back January the 4th, it looks like, and I don't remember exactly what day of the week that was, but if I remember correctly, that was close to the beginning of the week, and then it was a pretty good climb from there. Of course, we had some volatility in between, and then we moved back up. This market will turn around eventually. The question that everybody's asking is when exactly is that turnaround? Until then, we can dollar cost average. We don't take our money and just throw it all in at once, but little bits across different stocks and different areas. Travel stocks did pretty well today. Bank stocks are doing well. Also, oil. There's a lot of different areas in the market that are doing well. The S&P, if we go out to that 6-month view that we have, you can see, again, similar story. The S&P hasn't really taken it comparatively as hard. If we look back at the S&P back here on January the 29th, that was much lower than what we're sitting at right now. Right now we're sitting almost at this level that we have on February the 26th. So in terms of support, the S&P stands to maybe take a little bit harder based on the graph that we see here, but so far it hasn't taken as much of a dip as the NASDAQ has, and the Dow Jones has been the one that's been persevering the most through this in the 1 day. I mean, just trailing off at the end of the day to market close looked absolutely horrendous. If we take a look at the 5 day, not a great look. The 1 month, Oh, okay, well, at least it's green. It's higher to finish the month than it was to start the month, and we can really see that jagged zigzag in between. We want to see this either even out, or we would like to see it not bring in a new low. That would be the best case scenario for what we would see for this, and then we want to see it eventually establish higher lows and higher highs so we can know that it's growing once again. If we go out to the 6-month view on the Dow Jones, here, we don't see as sharp of a spike as we have from the other ones. We don't see as big of a dip as we had for the other ones. And that's all positive news for the market that we have there, that we're not really falling off the edge of a cliff as much as some people might think, that we're not having that sort of immediate crash that some people are expecting. The bond rates, yes, they're spiking. People are worried about them really inflating. So far, even it's the rate at which the bond yields, the 10-year Treasury yield that they're referring to, the rate at which that's climbing is the concerning part, because they are concerned that it's not going to turn around soon enough, and it's going to go and it's going to raise that rate, making the bond rates more appealing and causing more drops within the market. It's not the actual rate itself, because honestly, the rate itself is lower than the previous spiked high that we had. So if I could bring that up for just a moment. So if I go out as far as CNBC's chart will let me go, you can see that the bond yield, the 10-year Treasury yield, has been dropping over time, and the previous high was back here on, it looks like, April 2018, and we're still well below that level. As a matter of fact, right here you can see we actually have a decent line where it might just hold. If it does, it might turn around there. As far as breaking that high, we still have a fair amount to run in that yield before we really start to hit those higher rates than what we saw in the past. So while it's worth keeping an eye on, I don't know that it's something that's immediately concerning, that's really going to alter the place that we're at right now. And of course, that all really depends on what we get from the U.S. government. All right, so moving over to some stocks. Yesterday in my video, I put in Rocket Mortgages, and here's what it looks like today. Yesterday, I said that I sold. It was somewhere between $41 and $42. I went up over 100% of my investment, so I doubled my money, and so I just sold half, locked in my, managed my risk there. I felt that maybe selling it all and then buying back in later. But honestly, at this price, I'm still okay holding where I'm at. So every share that I own is a share of profit, and I think that I'm in good shape right now. And yes, I could buy back in at this level, but in my opinion, it's honestly a little high from where I would like it to be. So as Rocket Mortgages settles a little bit into a more of a slower and steadier growth, I might go back and put a little bit of risk back into that investment, because I do like Rocket Mortgages, and I think it is going to be a good year for things related to housing, even mortgage companies and banks in general. I think they're also going to come out strong through this. I also talked about NNDM yesterday, and they're continuing to sell off. They're down below half of where they were, down like 50% from their highs from where they were at. And if we zoom out a little bit on the daily chart, you can see that it was a really quick run up, and it's sort of unsustainable to keep going up at that rate, especially for a company that it still needs to make that money, still needs to ramp up that production. I love them. I think they're a great company. I think that they're very innovative and that they really stand to be disruptors. I think they're definitely a stock that ARK got right, but the market's going through trouble right now. NNDM is also going to go through that trouble, and you all have Stern talking about getting through the pandemic and then really hitting the marketing hard. I think that he's got the right thing going, and I think that we're going to see some value come back into the price per share for NNDM, so that their stock price, I think, will gain. I don't think it doesn't really have much to fall from here. If it goes back to that previous low of 781, another dollar down, I'll probably dollar cost average a few more shares. I did just buy a few more shares today that I need to toss into my growth portfolio, bring my average back down to closer to what it was before. I was around 7. I bought some when it was around $11. Then I think I was sitting around the $10 mark, and with these, it brings me back down closer. And I will continue to dollar cost average down from these as long as the news from NNDM stays positive, and as long as their outlook stays positive. I think that we're getting into the really, really good prices here, that we're getting into that panic oversold area for a lot of these plays. Here's another company that I mentioned, that was Golden Nugget, and I said after March 8th we should see some strength come back to that. especially with March 14th being what the government's talking about as the late time for that stimulus, the pandemic relief fund to come out for that 1.9 trillion, if that's what they still settle on. I think that we're sitting in really good shape for seeing a lot of strength come back to the share price for GNOG. It's down with the rest of the market, and being a spec play like the others and being something where the value is something that people are looking at, or the overvalued nature would be something that would be discussed, cause it to suffer. And so we're down under that $15 mark. So for me, buying a few more shares of GNOG just brings down the price that I had, which was fairly high, around the $20 mark, and I took this ride down with it, buying some more at that $14 mark. I think I evened it up, so that should put me right around the $17 mark. So this only has to recover about 20% or so until I break even on it, and then after that 20%, and after we get through March 8th and the warrant redemption, and as we get strength back into the market, I really think it's going to go green, and it's really going to help me make it easier to make gains on my investment. Another company that I shared before is Bank of America, and you can see they've had a great run of it since, and they continue to show that strength. So there we go at $36 per share, and I don't even remember what I bought them at, maybe $28 per share or so. But it's been, I think it was about around 28. And so watching them take that ride, it's been a fun ride, and I think they're going to continue to stay strong over time, at least throughout 2021, especially if we see that inflation come in and the interest rates rise and the banks standing to gain from that. I think that we're in really good shape. This is also a nice point to pause for a moment and talk about my dividend portfolio. Even though I don't share it here on YouTube, it's something that I do share over at my Patreon, and I'm not meaning to plug my Patreon right now, but I do want to talk about growth portfolio, which contracted about 20%. I was up at about 50% gain, and now I'm down to about 30% gain, and there were a lot of losses in there because there's a lot of speculative and growth plays, and it's a very risky portfolio in that way. The dividend portfolio is a lot safer, and that one, I started on February the 1st, I made my purchases, and that one is up about 8% now. So where the other portfolio contracted and took me back beyond where I was at the beginning of February, the portfolio that has the older, more mature companies in it has stand to gain. I think the worst performer that I have right now, percentage-wise, is down about 5% or so from when I purchased it, and the best performer is up around 35% from when I purchased it on February the 1st. And also, these companies pay decent dividends. So some of them are a little bit smaller but a little safer. Some are a little higher but a little bit riskier. But that's what I mean by investing in companies that are older and more mature. So if you don't have one, like a dividend portfolio setup where you have less risk and better guarantee of return, it's something that you might want to consider. So another one that I think I shared before, Goldman Sachs is in there, and they've had a really good run of it too. Here, I'll toss up Goldman Sachs. So looking at Goldman Sachs, if we go to February the 1st, I lucked out. I bought it right around this last bottom that it had, and it's just had an incredible run since then. It's gone up with the rest of the bank stocks. It looks a little bit like Bank of America does chart-wise, and it's been great. I'm up quite a bit of cash on that one. Plus, they pay a dividend on the side, and we don't have that same decay that we saw with the tech stocks or with the speculative plays, like I had in my growth portfolio, which I'm still up on. It just kind of reverts me back to where I was back in about the middle of January versus where I was at about the middle of February. So beginning and middle of February, I was much better off for that, up until now. But even though that risk is there, I don't know that diamond hands applies. I could have cut my losses, but with the big sell-off in the market and the fact that these are long-term holds, I'm holding a lot of these companies through it. I did get caught up in some of the EV stocks. I like the Chinese EV stocks. I really think that they have a lot of opportunity over in China. The semiconductor thing is messing things up. So NIO taking it hard. They were in the low 40s today. Li, Xpeng also just moving in sympathy, and also is subject to the same troubles that pretty much the world is right now for supply chain for semiconductor. And as I was reading up about that, ramping up the production for semiconductors is far more difficult than it sounds. That it's not just as easy as saying, okay, well, we'll just make more. One statistic that I read said that building a new factory, adding onto a factory would be like a 5-year process for doing that. So I don't know the technical side of the semiconductors, and I don't know all the different parts that come into the supply chain. My takeaway from reading the article was that it's just not going to be an easy fix, that ramping up production will not be the flip of a switch, that it is going to have the impact that they're saying that it is going to have in Q3 of 2021. All right, so let me summarize. The market, there's a lot of sell-offs. Dollar cost averaging down with it is a good way to bring down the average share price that you have for the stocks. Be careful about the stocks that you invest into. You want to be careful that you are finding plays that are actual value stocks, not value traps, and ones that still have that sort of growth potential. So if you see that there's bad news about the company, something that would really seriously affect that company specifically, then maybe that might be something that you would stay away from. But if it's something that would be an entire sector that's down, then dollar cost averaging down with that sector, or holding off on that sector until you believe that there's a catalyst that would bring strength back into it. Those are different options that you can have. They're definitely things that I watch. Should I add, shouldn't I add? And today was a lot of watching and a lot of deciding, a lot of thinking, mulling it over about where I wanted to put my money. And in the end, I picked up a few stocks, and I think that'll do well for me. So I hope that you use today as a buying opportunity, or at least today to think over some of the investments that you have and look throughout the market, find areas of strength, ones that you really think are going to help you as an investor moving forward and persevere through these sell-off times and through these correction times, or maybe if it's a sector crash that we have, to get through those and just keep on trying to make the best decision possible, the most informed decision possible as you continue to invest. If you guys are interested at all in stopping over at my Patreon, checking it out, that link is down in the description. If you want to sign up for Webull and deposit $100, get your 2 free stocks, that link is also down in the description. Thanks ahead of time for either one of those. Also, subscribe, hit the notification bell, hit the like button, share it with your friends. Remember, this video is for entertainment purposes only. Always do your own research and due diligence. Contact a financial advisor before making any financial decisions. I'm Dr. Stock. Thanks for rocking with me. Now go get that money.